Good evening and welcome viewers for this webinar on tax audit organized by Taxation Audit Quality Review Board, headed by CA Dr. Raj Chawlaji, who is chairman of the committee, and I, Chandrasekhar Chittal, am vice chairman of the committee. And I welcome our speaker for the evening, Manoj Kumar. If you are having view of Manoj Kumarji, behind him is so many books, so that you will understand that he is very well read, and whatever questions you have, whatever queries you have, he has anticipated, and he will be able to elucidate clause number 32 to clause number 44 in tax audit form 3CD. Friends, this particular series we will be continuing till end of September, so that in next session maybe sessions are reserved only for queries, and we have received so many queries. Our website taqrb@ici.in, and we will be in a position to address those queries. Maybe we will take help of luminaries like Manoj Kumarji and others. Friends, in the month of July, this is the last week, and I'm sure that you are occupied in compiling ITRs for non-tax audit assessees. But please try to appreciate that whatever law is being discussed today by Manoj Kumarji is also relevant for those assessees who are not subject to tax audit, because you have to consider those allowances and disallowances for the purpose of compiling the return of income and then uploading the ITR, and also taking a call as to what is the appropriate manner in which the subject which is dealt with in those particular clauses is to be considered. So we are very fortunate to have an illustrious personality like Manoj Kumarji, who has accepted our request to address the audience. And Manoj Kumarji, we are truly delighted that you have agreed to participate your time for TAQRB and for the audience. And I'm sure after your address, the audience would be highly educated and have new insights in these particular clauses. So with these words, I welcome you, and I welcome all those who have gathered today for the purpose of listening the address by Manoj Kumarji on clause number 32 to clause number 44 in Form 3CD of Tax Audit Report. Thank you. Over to you, Chairman.
Thank you, Chitla sir. Good evening to all. Respected Vice Chairman CA Chandrasekhar Chitla ji, our faculty for today's program CA Manoj Kumar ji, our panelist CA Nishant Kumar ji and CA Ankit Sharma ji, and my dear friends. I welcome you all in a very important webinar from the series on tax audit practice session 7, that is commonly found irregularity in form number 3CD, clauses 32 to 44. Today we are going to discuss the commonly found irregularities observed by the board during review process in the form number 3CD. As you all are aware that reporting detail under form number 3CD are important and crucial from the viewpoint of allowances and disallowances of various amounts under the Income Tax Act. So it becomes very important matter to conduct the tax audit cautiously and report the details appropriately. The clauses covered today are from clause 32 to 44 of form number 3CD. In these clauses, some of various subclauses are very important from the audit and reporting point of view. Continuing its effort to improvise the quality of the tax audit, TAQRB bring out this webinar which will help and guide members in enhancing and improving the quality of tax audit. Our today's speaker for the webinar is CA Manoj Kumarji for showing his insight in the topic. Now, without further delay, I would like to invite C. Ankit Sharma ji to take over the session for introductory remarks. Ankit ji, please.
Thank you, C. Raj Chawla sir, for the warm and wonderful introduction. Firstly, I would express my great appreciation to the committee TAQRB for conducting this wonderful webinar, a series of webinars. Today we have a 7th webinar, and these webinars will continue till the end of September, and I expect it will help up members in a practice or in an industry, that they will get a very good response while filing the tax audit reports. And I welcome the chairman of the committee, C. Raj Chawla sir, the vice chairman of the committee, Chitle sir, the speaker of the today's session, CA Manoj Kumar ji and CA Nishant Kumar ji. The TAQRB committee is a very important committee of the ICI who review the reports prescribed under the Act and the certificate by the chartered accountants to determine the compliance with the reporting requirement prescribed under the law. I am honored to introduce our esteemed speaker of the today's session, CA Manoj Kumar ji, who will be sharing their expertise, knowledge on the topic commonly found irregularities in the Form 3CD under clause 32 to 44. Sir, he is a part of the Direct Tax Committee and the International Taxation since last 3 years. He is an ex-executive member of the International Financial Fiscal Association, Northern Region, and the Chamber of Tax Consultant, Delhi Zone. He is a special invitee committee of the ITAT Delhi. He has written various articles for the profession in the journals and the newspapers. So I once again welcome CA Manoj Kumar ji, and I am sure that his wealth of knowledge and experience will inspire and empower all those who are viewing today's webinar. Over to you, sir.
Thank you, Ankit. Respected Chitle sir, Chawla ji, dear friend Ankit, Nishan, others, and my all learned friends. I'm really thankful to ICI to provide me an opportunity to share my view on this issue of commonly found error in Form 3CD from 32 to 44. And I'm also thankful.
So the voice is proper, you can continue.
I also appreciate a lot all the people who are present to. I also lot the participants who are here to listen this seminar in this spite of being busy schedule of filing of ITR. It shows the passion to learn and to provide better services in the profession. And we are going to start and learn about quality, how to improve quality in our tax audits. So it's very much, so let us, and this is a 7th session on this issue. So let us see how much we have learned in the last 6 sessions and aware about it. Let us do some warm-up exercise through question area. Ankit, can we go for question answers with the chats?
We take up kar lenge.
Questions from the audience in this way. Let me put some questions to make it interactive with all the participants. So that and I put certain question to them, they can reply it through the chat box.
Okay, sir.
Can we do this? And I'm sharing my PowerPoint presentation also.
Sir, we will take questions after the end of the session. So
I'm not saying their question. My purpose is to make this session interactive.
Sir, right now we don't have any questions from participants, so we can continue our session. Then we can put.
I think Manoj sir is asking whether we should continue without question answer session or we should.
I will ask certain questions from the participants.
Okay, sir, you can ask the participant question. Then if we have any question, then we will share with you.
Please, sir. Thank you.
Okay.
So, as we have been doing audit. Okay. Just would like to know when the tax audit concept came into picture. Anyone can answer this?
Actually, Manoj sir, participants have no option to reply your question. They are in the chat box. We will take the question after the session completed. Please continue your session, sir.
Okay. So we can. Okay. So friends, the concept of tax audit came into existence in 1984 with the purpose so that we can assist the income tax department to find the correct income of the assessee. Are we aware that if we report any error in the tax audit report, there is a penalty for the same? Then there is section 271J, which provides for the penalty at the rate of 10,000. This issue is not simply of the penalty of 10,000, but there is a huge risk of an ICI dispensary action if we provide any wrong information, incorrect information in the tax audit report. Next issue is that how are we qualified for the tax audit? Then we have to see whether our any fees is pending with any client. If yes, then we cannot do the tax audit. We should have this clarity about it, that our fees should be cleared before conducting any tax audit. Now, who cannot do the tax audit? Who cannot do the statutory audit under section 143 of the Companies Act? They cannot do the tax audit. Internal auditor cannot be a tax auditor. Indebted to company more than 1 lakh holding shares of a company, you cannot do the tax audit. Insolvent or punishment for involvement, insolvent in fraud, then you cannot do it. If you are relative of the company or director in a company, you cannot do the tax audit. You can do maximum tax audit of 60. What is the lower law? For assessment year 23-24, you have to go for a tax audit. Then I will go to go section 44AB, Rule 6G, Form 3CA, Form 3CB, Form 3CD, and Section 271B. This is the whole law I have to see when I will go for the tax audit. How many are aware about the difference between the Form 3CA and 3CB? And 3CB. As we know, to that extent that 3CA leads to then in the case of a entity audited under any other section or act, and 3CB is done in the case of an entity not audited under any other law. But we further know what is the importance of it, and 3CA, 3CB can be much bigger than the Form 3CD. If we look at the para 3CA, para 3 of Form 3CA, it asks our observations and comment on the tax audit conducted by us. But when we go to 3CB, then it has two observations of us in para 3 and para Form 5. In para 3, he asks our observation about the books of account, where the books of account given true and fair view, because in this case we also do the audit of the financial statements. But in the case of a company or other organization audited under any other act, they are audited under any other act by any other C or maybe by you. So report is given over there. But when come to Form 3CB, in the case of entity not being audited under any other law, then we do two audits. First, financial audit and another tax audit. So in case of financial audit, we give reports about the books of account. And in para 5, we give our objection about the tax audits. So we have double responsibility in case of Form 3CB, in case of entity not registered. Now, as per our standard of auditing, what observation we are supposed to give in Form 3CB? I do not know how many of you are reporting, but we are supposed to define our responsibility with relation to the books of account or assessee responsibility with respect to them. If I look at the assessee responsibility, then I define in Form 3CB, para 3, assessee responsibility as assessee is responsible for preparation of the financial statement in accordance with the accounting standard issued by CI. Further, I report in preparation of the financial statement, management responsible for assessing the entity's ability to continue as a going concern. Third, those charged with the governance are responsible for overseeing the entity's financial reporting process. These are the assessee responsibility which I defined when I go for Form 3CB, para 3. Then I define my responsibility. My responsibility is to obtain reasonable assurance about that the financial statements are free from material misstatement. Further, what is a reasonable assurance I also gave is high level of standard, but is not a guarantee. Then audit will be conducted or will always detect a material misstatement. Misstatement can arise from fraud, error, and are considered material if individually or in aggregate they could reasonably be expected to influence the economic decision of the user taken on the basis of these financial statements. Further, as a report, we exercise our professional judgments and maintain professional skepticism throughout the audits. Further, I report that what is the responsibility of tax auditor? Assess the risk of material misstatement of the financial statement. The risk of not detecting a material statement, then I define it. Then I further say about the financial statement, obtain understanding of the internal control level to the audit in order to design audit process that appropriate in circumstances and not for the purpose of expressing an opinion on the effectiveness of the entity internal control. Then I evaluate the appropriateness of the accounting policy. Then I conclude on the appropriateness of management use of going on concern. If I find that disclosure is inadequate, then I notify it. I also communicate an auditor communicate with those charged with the governance regarding, among other matters, planned scope and timing of auditing and significant audit findings. It's also responsibility of the auditor to state that we also provide those charged with the governance with a statement that we have complied with the relevant ethical requirement regarding independence and to communicate with them all relationships and those matters that may reasonably brought to bear on our independence. Now I come to para 3CB. 3CB para 3, 5 and 3CA para 5. Then I write up 3CB para 5 and 3CA para 3. I defined first assessee responsibility. This is the assessee responsibility to provide the field statement of Form 3CB. My job starts after that. I need to fill up Form 3CD and give my observation in Form 3CB para 5, 3CA para 3. I'm supposed to, what my responsibility right, that we are responsible for verifying the statement of particulars furnished by the assessee. We also observe about the judicial pronouncements while taking any particular view. If there is a judicial opinion conflict, then we report also that. What are the important points to be considered by the tax auditor? He has to give information in Form 3CB should based on the books of accounts, reports, documents, information, explanation made available to the tax auditor for his examination. If a particular item of income expenditure is covered in more than one area, then he has to specify that. If there is a difference in the opinion of tax auditor and that of the assessee, he has to put both in the Form 3CD or 3C and 3CA para 3 and 3CB para 5. Important point to be considered further that if any particular issue is not applicable, the auditor should write not applicable. or if he is not getting any particular information, then he should qualify his report. What may be qualification? Not following mandatory AS like AS 15, non-provision of income tax, employee benefit, especially retirement benefit not provision, confirmation of balance, inventory valuation estimate basis, if TDS is not deducted, then all need to be reported. Now we come to the clause-wise analysis of clause 32 to clause 44. What are the observation of the tax audit quality review board? That what as a tax auditor we are missing to report. Clause 32A, details of brought forward loss or depreciation allowance. What we are supposed to provide, that is there any brought forward loss or unabsorbed depreciation allowance carried forward from the earlier years. In this table, what we state in the table, that assessment year for which this loss pertains to, what is the nature of loss, means it's a loss from house property, business loss or any other loss. What is the amount that is returned? What are the amount allowance not allowed under so and so when you operate this scheme? Amount as adjusted by withdrawal of additional depreciation on account of opting for taxation of BSC, BBAD. Amounts as assessed give by the assessing officer or under 143(1)(a), and then they give a remark. Now, in fact, if there is any order, what we are supposed to look, if there is any order, assessment, revision, or appeal proceedings, we have to report about that also. In this column number 7, we have to report about section under which the order passed and date of order. Now, what is the observation of the tax audit quality report board when they review the tax audit balance? That in certain reports, section under which assessment order was passed and date of order was not reported. So we have to ensure that whenever we fill clause 32A, we state the date of assessment and under section which this assessment has been made, whether 143(1), 143(3), 47. Now, clause 32B requires details of change in shareholding, if any. Section 79 of the Act provides that if there is change in the shareholder of the company, more than 51% of the beneficial voting power, and if there is any loss carried forward, then that carry forward of loss shall not be allowed. Means if there is a change in the shareholding. But what is asking about? Beneficial's honor should remain the same. However, Delhi High Court in one of the case of Young Restaurant and Hold, where there was change in shareholding of the holding company, but ultimately holding company lying in USA remains the same. There was no change in holding, but it still holds. High Court that carry forward of the loss will not be allowed because first holding company there was change in the shareholding. Now we come to clause 34. Here we are supposed to report about that tax compliance with the TDS provision. What we are supposed to report? Tax deduction and collection account number, section under which the TDS is required to be deducted, nature of payment, whether it's a contractual payment, professional payment, total amount of payment or receipt of the nature, against contractual payment kitni hai total as debited in the P&L account, total amount on which TDS is deducted, total amount on which tax was deducted at the specified rate, amount of out of which tax deducted, total amount of which tax deducted at less than the specified rate, amount of tax deducted or collected, and how much amount collected and deposited in the central government account. Now, the observation of the Tax Audit Control Board about it is that the column 4, total amount of payment or receipt of the nature specified in column 3, for the total amount, whether TDS deducted or not, it should generally match with your financial statements amount. Means if the professional payment is coming in the financial statements 50 lakhs rupees, then the same amount should come here. But it was missing. There was some mismatch into that. Further, wherever there is a lower TDS deducted because of the lower TDS certificate or DTA, then it is also to be reported in column 6. These 2 points to be kept in mind. Further, there may be lots of judicial conflict on any particular amount, whether TDS to be deducted or not. Or they will conflict with the assessee also. He may follow one judgment, you may follow one judgment. Then all should be reported in Form 3CA para 3 and Form 3CB para 5. This thing to be kept in mind. Whether 36A has received any amount in the nature of a dividend, as referred to in subclause E of clause 22 of section 2. Here we are talking about deemed dividend, and we are supposed to report about the deemed dividends in clause 36A subclause A. And it occurs when the 5 conditions are satisfied, that it's by a not a clause substantially, it's by a company in which the publics are not substantially interested. It should be by a loan advance. Specified shareholder, it should be specified shareholder, which shareholder, registered shareholder, it should be beneficial shareholders, it should have more than 10% of the voting powers in the company. Further, it may be a by of loan or advance when the concern which will ultimately benefit the shareholder. And third, it should be to the extent of the accumulated profit of the company at the time of the payment of loan or advance. So these 5 conditions should be satisfied. Up to what we have to keep in mind that there should be accumulated profit in the company up to the date of payment. So beyond that, there cannot be a deemed dividend. Further, what is the concern? This has been defined explanation through HUF, firm, AOP, or body of individuals. Further, what is the which says that it should have substantial interest in the concern. What is a substantial interest? That has been defined by section 2, clause 32, which was not less than 20%. Then we say it has a substantial interest in the concern. Now it further says that it will charge, even if you give a loan or advance to any concern, it will be chargeable in the hand of shareholder, not in the concern. As so held by the Honorable Supreme Court in case of CIT versus Madhur Housing and Development, and Delhi High Court in case of CIT versus Ankita. This is further held by the Bombay High Court in case of CIT versus Universal Medicare Private Limited. And now, what the auditor is supposed to do? Auditor should obtain a certificate from the assessee containing a list of closely held company in which he is the beneficial owner of shares, can not less than 10% of the voting power, and list of concern in which he has substantial interest. He should also obtain a certificate from the assessee giving particulars of any loan or advances received by any concern in which he has substantial interest from any closely held company in which he is beneficial owner of shares, carrying not less than 10% voting power. Tax auditor should also include appropriately marks of his inability to independently verify the information and reliance on the certificate obtained from the assessee. He can include his remarks in para 3 of Form 3CA and para clause 5 or para 5 of Form 3CB. Now, what cannot be further? What cannot be a dividend? If the dividend is given, this is given in the ordinary course of business, means assessee is in a lending business, and the lending business, the loans advance are given, then it is not considered as a dividend. There is circular regarding this by the Secretary, circular number 19, 2017, dated 12th June 2017, stating business advance or trade advance from closely held company to assessee or concern in which the assessee has the substantial interest are out of the purview of section 222E. and need not be reported as dividend under this clause of Form 3CB. Now, what is not a part of accrued profit? Deferred tax reserves as held by, in the case of Ashok Bhai, Chunna Bhai, for the exact capital gain for accounting and commodity will not be counted. Share premium account shall not be counted for calculating accrued profit. Any payment made by a company on purchase of its own share from a shareholder in accordance with the provision of Section 77A of the Companies Act, it will not be a part of accrued profit. Any distribution of share pursuant to a demerger by the resultant company, it will not be counted as a part of accrued profit. Now we come to 3.4, subclause C. It says whether assessee is liable to pay interest under Section 201(1)(a) or Section 206(6)(7) if he has please furnish. He asks TAN number, the amount of interest, and he also asks amount paid and date of payment. The Tax Quality Control Board found, while using the tax report, that date of payment of interest with respective amounts are not being informed or reported under the respective column. So we are need to keep in mind that we should report the amount and date of payment. Clause 35 requires reporting in case of a trading concern. Give quantity details of principal items of goods traded, opening stock, purchase during the previous year, sales during the previous year, closing stock, shortage, excess if any. It further requires that auditors should obtain a certificate from the assessee in respect of principal items of goods traded, balance of the opening stock, purchase, sales, and closing stock, an extent of shortage, excess, damage, and reason thereof. Which one should obtain a certificate. What is the observation of the Tax Audit Quality Control Board? They found that generally quantitative details of principal items of goods traded were not reported under this clause, whereas trading was reported as one of the business of the assessee under clause 10A. In some cases, where closing stock goods acquired for trading was reported as nil, the quantitative detail of opening, purchase, and sales made during the year were not reported under this clause. Clause 35B, it says in case of a manufacturing concern, give quantity details of principal items of raw materials, finished goods, finished products, and byproduct. Case of raw material, opening stock, purchase during the previous year, consumption during the previous year, and sales during the previous year. Closing stock of finished products, percentage of yield, shortage, excess if any. Further, with regard to product, it requires opening stock, purchase during the previous year, quantity manufactured during the previous year, sales during the previous year, closing stock, shortage, excess if any. The clause requires that quantity details of principal items of raw material and finished goods should be given. Therefore, information about petty items need not be given. What would constitute principal item, which is more than 10% of the aggregate value of purchase, consumptions, or turnover, may be classified as principal item. Certificate should be taken regarding principal items of raw materials and finished products. The observation of Tax Audit Quality Control Body, in some cases where the assessed is engaged in manufacturing, the percentage of yield or shortage of the excess were not reported. Also, qualification, public observation with regard to same was not given in the tax audit report. In some cases, details of finished products were erroneously reported as raw material under clause 35B(a) instead of clause 35B(b). Also, raw materials which were clearly traceable from the financial statements were not reported at all. So we should take care that we should report yield, percentage of yield, shortage of excess, details of finished products, quantity wise we should give. Clause 37 requires where any cost audit was carried out. If yes, give the details, if any, of the disqualification or disagreement on any matter, item, value, quantity, and may be reported or identified by the cost auditor. That auditor should ascertain from the management whether the cost audit was carried out. If yes, a copy of the same should be obtained from the assessee. Should also take into account the details of disqualification, disagreement on any matter, item, value, quantity, and may be reported or identified by the cost auditor. So what is the observation of the Tax Audit Quality Control Board? We observe that representation from the management was relied upon to report as to whether or not there is a disqualification or disagreement on any matter. As per the guidance note, copy of the audit report should have been obtained from the management and note of the details of disqualification or disagreement on any matter, item, value, public quantity, as the case may be, reported or identified under this clause should have been taken. But generally it is not taken. In certain cases, it was mentioned in clause 3 of form 3CA or para 5 of form 3CB, as the case may be, that the cost audit report is attached wherewith, while under this clause no was reported, both being contradictory statement. So we should take care of this. Clause 38. Clause 38, whether any audit was conducted under the Central Excise Act. If yes, give the details, if any, of disqualification or disagreement on any matter, item, value, quantity, as may be reported, identified by the auditor. The tax auditor should ascertain from the management whether audit was conducted under the Central Excise Act, and such audit was carried out, obtain a copy of the report. And take note of the details, if any, of the disqualification, disagreement on any matter, item, value, quantity, and may be reported or identified by the auditor. The observation of the Tax Audit Quality Report Control Body that representation from the management was relied upon to report as to whether or not there is a disqualification or disagreement on any matter. As per the guidance note, copy of the audit report should have been obtained from the management and note of the details of disqualification or disagreement on any matter, item, value, quantity, as the case may be, reported or identified under this course should have been taken. In certain cases, it was mentioned in clause 3 of form 3CA or clause 5 of form 3CB, as the case may be, that the excise audit report is attached herewith. While in this clause, no was reported, both being contradictory statement. So we should take care of this. Clause 14, details regarding turnover, gross profit, etc. for the previous years and preceding previous year. In this clause, we are supposed to give turnover, GP ratio, net profit ratio, stock turnover ratio, and material consumption ratios. Now, what is the observation of the committee on various points? These ratios have to be calculated by the assessee who are engaged in manufacturing or trading activity. Moreover, the ratio have to be given for the business as a whole and need not be given product-wise. Further, the ratio mentioned in 5 need not be given for trading concern or service provider. It is observed that in respect of service sector, note applicable should be reported under this clause instead of leaving the same blank. The clause 5, material consumed and finished goods. If we look at in case of service sector, column number 2, row number 2, row number 4, or row number 5. That is gross profit ratio, stock in trade, stock turnover ratio, and material consumption ratio are not required to be reported. Only row number 1 and row number 3 are required to be reported in case of service sector. And other, we are supposed to write not applicable. In fact, the whole tax audit report, we are supposed to write not applicable, nil, but we are not supposed to leave any column blank. That is the mandate we have to take. As per para 67.3 of the guidance note, the turnover is aggregate amount for which the sales are affected or service is rendered by an enterprise. As per para 5.16 of the guidance on tax audit, sale proceeds of scrap and wastage is to be included in the turnover. But there was an observation by the board that scrap sale is not being considered while arriving at the figure of turnover for tax audit purpose. So we should account scrap sale also as a part of the turnover. Further, para 67.3 of the guidance note, it says net profit to be shown. Here in this clause is net profit before tax. But the tax audit quality control board observed that net profit after tax was being reported under this clause, which is quite wrong. As per para 67.4 of the guidance note, for the purpose of calculating the ratio mentioned in 4, only closing stock is to be considered. The term stock in trade used therein does not include stores and spare parts or used tools. The term stock in trade would include only finished goods and would not include a stock of raw materials and work in progress. Since the objective here is to compute the stock turnover ratio. However, the board observed that for calculating stock in trade turnover ratio, average stock was being taken instead of calculating stock as per the above mentioned guidance given in the guidance. So we have to keep in mind that we have to take only closing stock. In the case of a manufacturing unit, reporting under clause supply ratio of material consumed and material goods produced is required. Now, this ratio are not being reported in the case of a manufacturing concern, so we have to take care of this. They should see further between numerator and denominator while calculating the ratio. It should not be that in 1 year we take separate numerator and denominator, and the next year we take separate numerator and denominator. We should keep in mind. Further, the relevant previous year figures are to be taken from the previous year audit report. In case the previous preceding report is not available or was not subject to audit, then you have to take in mind. The board observed that there was a mismatch of figure in the material consumed reported in respect of preceding previous years. And further, the auditor did not report it in para 3 or clause 3 of form 3CA or clause 5 of form 3CB. For me, from para 3 of form 3CA and para 5 of form 3CB should be much bigger than the form 3CDB. Here is the place where we can openly give our true comment about our findings, observation in form 3CD, which is given, filled up by the assessing in physical form, from which we fill the 3CD also. Just a minute. Well, now we come to clause 44, which is the most important clause as of today. Lots of queries are there, and I will try to sort out all the queries in my presentation. The reporting for it came by notification number 33, 2018, dated 20th July 2018. For one or the other reason, it being posted year to year, but become applicable first for the assessment year 2022-23 and now 23-24 also. Friend, it's not a difficult one, it's an easy one. Just listen to me carefully. You will get the reply of all your queries into this. What we are supposed to report? We have been given 7 columns to fill up. Column 1 requires serial number. Column 2 requires total amount of expenditure incurred during the year. Further, column 3, 4, 5, 6 requires an expenditure in respect of entity registered under the GST. Means if you have taken supply of goods or services from entity which is registered under the GST, we have to report here. And column 7, we have to report about receipt of supply and services or goods taken from an unregistered person. Now, what we are now we shall see column by column what we are supposed to fill in each column. In column number 2, we are supposed to fill total amount of expenditure incurred during the year. When we read this total amount of expenditure incurred during the year, the question arises in our mind whether we have to give the expenditure headwise or total expenditure. As the word is total amount of expenditure, so we are not supposed to report headwise, we are to report total amount of expenditure. Second, whether purchase is a part of expenditure. Whatever material we are purchasing are to be reported under the head amount of expenditure. Yes, purchase is a part of expenditure. Third, whether provisions are to be reported. As far as provisions regarding expenditure, audit fee, telephone bill, etc., yes, to be reported. But when we talk of the provision for bad and doubtful debts, provision for diminishing the value of the fixed assets, machinery, plant, and then they are not to be reported. Expenditure versus assets, yes, it includes expenditure means whether it's a revenue expenditure or capital expenditure, we are supposed to report both over here. Expenditure of bad debts, no, bad debt due to supply, it is not to be reported. Expenditure versus allowances, are allowances to be reported, allowances are not expenditure, like depreciation allowance, so it is not to be reported. Now, if we look at column 3 to 6, as per our guidance note, 3 to 6 talks about expenditure and respect of entity registered under GST, and column 7 talks about expenditure relating to entity registered under GST. But in both the cases, it's talking about the supply, which is covered under GST. So we have to report in column 3 to 7 only expenditures which is supply in terms of section 7 of the CGST Act, that is to be reported. What is not a supply? Like salary of the employee, as per schedule 3rd to the GST Act 2017, it is not to be reported. Now, this is the chart given under the guidance note for our help to reach the amount of total amount of expenditure incurred during the year. How to arrive at it? So, first of all, take total value of expenditure in the profit and loss account for the year. Add capital expenditure incurred during the year, which is not reported in the P&L account. Then total value of non-cash charge considered as expenditure, they should be reduced. Then total value of expenditure excluded for being transaction securities and transaction money, they are to be reduced. Then total value of expenditure excluded by virtue of schedule 3rd to the CGST Act, they are to be excluded. Then what we reach is the total amount of expenditure incurred, which is to be reported under column 2. Now, which is confusing to many one of us, that whether it's talking about expenditure in respect of entity registered under the GST, whether entity include also. So there are two schools of thoughts on it. One school of thought says entities are not individuals. So any receipt of goods or services from an entity, from an individual are not to be reported. There is another school of thought which says if individual is carrying on a business, then it's also entity and it should be reported. I made a little bit search from some dictionary, finding out the meaning of the word entity. So law insiders say person entity means an individual's natural person, corporation, government, or politician subdivision. Means as per the law insiders, entity includes individual also. P13 says entity is synonymous with person, as that term is used in the broad legal sense. If we go by the person, then person includes individual also as per section 2 clause 31. Both terms are defined as an individuals and so and so. So I do not say which way you want to follow. If you want to follow this way, then entities include individuals, then you should report in para 3 of form 3CA or para 5 of form 3CB. You feel that individuals are not entities, then accordingly report it. It's up to you and your choice. Whatever way you follow, keep it in your working paper and report it in form 3CA para 3 and para 5 of form 3CB. Now, column 3 talks about expenditure related to exempt supply. The question arises, what is the exempt supply? Section 2, clause 47 of the CGST Act defines exempt supply. It means supply of goods or services both which are taxed, nil rate of tax, or which may be wholly exempt from tax under Section 11 or under Section 6 of the IGCST Act and includes non-taxable supply. Following notification may be followed to ascertain the exempt supplies. Notification number 1/2017, notification number 2/2017, notification number 11/2017, notification number 12/2017, notification number 1/2017, 2 of IGSTL, CGSTL of different acts. So these are all notifications which we may see to find out whether a particular item is exempt or not. What is a non-taxable supply? It has been defined by Section 2, Section 2, Clause 78. Supply of goods or services of both, which is not leviable to tax under this Act or under the IGST Act. Supply of alcoholic liquors for human consumption, not leviable to tax. Petrol, crude, high-speed diesel oil, motor spirit, aviation, turbine fuel, and natural fuel. So these are all non-taxable supplies. Come to column number 4. It relates to expenditures relating to dealer fallen under composition supplies. The composition dealer cannot charge GST. It cannot make interstate supply. It can only bill of supply, not GST supply. The composition should have mentioned the following line of the top of the bill: composition taxable person not eligible to collect tax on the supply. So whenever you have to find out whether it's a composition deal or not, we should look at the top of the bill. In case of ineligible input tax credit, which are blocked under Section 17(5), in case of purchase from person registered under the composition supply. Generally, the small and medium taxpayer do not mention the GST number of the said supplier in their accounting software. So we should take a certificate or MRL from the taxpayer and report it in para 3 of form 3CA or para 5 of form 3CB. Column 5 deals relating to other registered entity, which we have to report all taxable supplies over there. Column 6 deals with total payment to registered entity, means which is not a composition means at all. Then comes the column 6, total payment to registered person. There is a possibility that the dealer may procure both exempted and taxable supply from the same dealer, or one bill having both exempt and taxable supply. So we have to segregate and look at the bill precisely. Whether this is the case, then we have to segregate it while making our table of exempt supply, taxable supply. If exempted supply, then we have to report in column 3. Now question arises, it's a total payment for. exempted composition and rested person, rested team. So the question is whether I need to report over payment side or expenditure side. So the ICI in their guidance note said we should have a harmonious interpretation and we should report on the expenditure incurred, not whether paid or not. So whatever expenditure paid and debit in the P&L account, we should report all that. We should not go by the nomenclature of the word payment. Now, column 7 requires us to report supplies of goods services from the unregistered person. What we have to include? Goods or services received from unregistered person. It also includes import of goods or services which are liable to GST. Now, there may be certain supplies from an unregistered person or maybe a registered person, but we may take it as an unregistered persons. Like if we take a supply from a registered person, but that supply is a block credit. So we have to see GSTR 2A to find out what are those supplies which are coming in GSTR 2A and which are blocked, and what are the GST number of that person, so that we can report in para 326 and not para 7. Similarly, if we take a supply under RCM, we may take it as from unregistered person. No. To find out the truth, we have to see GSTR 2A, we have to see RCM invoice, purchase, we have to see invoice section 31(3)(f) to find out the truth. Now, section 10/11 composition suppliers, we have to check for that table 5 of GSTR 3B, which requires the reporting of the composition supply. Now, there are certain cases where GST of the auditee not mentioned, ITC not claimed, expense not booked, expenses booked including GST. Then we have to see the vouchings and to find out whether any expenditure including GST debit in the P&L account, to find out whether the supplier is a registered or unregistered person. We have to ensure that the column of 6 and 7 matches with the 2, except with the difference with regard to the non-taxable, non-GST supply, like petrol, salaries of the staff, they are non-GST supply, so that will not be a part of it. And we have to make a reconciliation of it and keep it in our reserve. Now, further we have to see, there will be a case where there will be a differentiation between the current status of the supplier registration from the status it was at the time of supply. Because when you purchase the goods, he was registered, but as in today, his registration may be cancelled because of some complaint or because of some other reason. Then it's an event occurring after the balance sheet date, but it does not change the nature of expenditure incurred at that time when the goods were purchased. When the goods were purchased, he was a registered dealer. So we have to report as per that. But yes, it will become meaningful in para 3 of 3CA and para 5 of 3CB. We report this fact that at the time of purchase, he was a registered dealer, but later on, his registration was cancelled from the back date. There should not be over reporting. We have to keep in mind para 7 or column 7, supplies from the unregistered person, it may lead to scrutiny also. A declaration should be taken from the audit that he has not recorded GST where ITC has not been claimed. Disclosure about reporting form 7. क्या हमें disclosure करना है? We should take a support from GSTR 2A to find out purchases unrecorded in the books of account, to identify the purchases which are not reported or so reported by the supplier, to identify the purchase where there is a difference in amount and tax, have been taking timely rectification steps and follow up. Other issue, if reporting inclusive of GST or exclusive of GST, हमें report करना है. So the way the assessee has debited the expenditure, whether inclusive or exclusively, accordingly we have to report. We are not to follow any standard method. It depends upon how the associate debited expenditure account. Depreciations, provisions, amortization are not to be considered. If the associate lots of branches all over India, so we have to report entity-wise. The whole over India reporting should be done. If we are doing the branch audit, then we have to report on the branch audit only. This is the checklist provided by the ICI in the guidance note that we should get it filled from the SSC, expenditure head, name of that entity to whom the payment made, GSTN of the entity, where the composition dealer, value debited to expenditure account, value for which input tax credit is taken, total amount paid to the vendor, reason for nil or GST, and other. Or if the transaction are huge in nature, the audit may be conducted on a tax check basis also. What could be disclosed as asserted by the ICI, and appropriate disclosure should be made by the tax auditor in Form 3C and 3CB, as the case may be, for the view taken by the assessor in relation to what is the meaning of the expenditure, so the expenditure, method of filling up the appropriate column is as required in clause 44. An appropriate disclosure, disclaimer should be made by the auditor in Form 3C and 3CB. Para 3 of Form 3CA and Para 5 of Form 3CB. We should keep in mind, हमें रख लेना चाहिए, Para 3 of Form 3CA and Para 3 or Para 5 of Form 3CB, where हमें अपने observation देने हैं. And now let us understand the reporting with the help of an illustration. Total expenditure of the entity debited to profit is around 250 lakhs. Purchase made from the composition during the year 5 lakh. Total expenditure incurred on income supply 5 lakh from listed entity and 15 lakh from unlisted entity. Total security services paid under RCM 5 lakh. Total expenditure of fuel and power 30 lakhs. Total expenditure in freight, RCM and FCM 5 lakhs from unlisted and 5 lakhs from listed persons. Total employee cost salary 17 lakh. Total interest paid 20 lakh, 5 lakh out of 15 lakh to bank and 5 lakh to individuals. Depreciation debit to profit and loss account. Land purchase worth rupees 100 lakhs and motorcycle worth rupees 25 lakhs. And how to report? Total expenses to 45 lakhs, as we can see. Purchase 5 lakhs, that's from a listed entity. We have reported in column 6, listed entity. And from composition dealer, I have reported under composition dealer, and that goes over here. Exempt 20 lakh, out of which 5 lakh is from listed person and 15 lakhs from the unlisted person. I have reported over here. Security 5 lakhs from unlisted person. I have put over here under RCM. Power and fuel 13 lakh, as it is a non-taxable non-GST supplies. I have not reported over here. Freight 10 lakh, 5 lakh from the listed entity, 5 lakh from unlisted entity. Salary non-GST supply, so I have not reported over here. Interest on loan 25 lakh, 15 lakh to bank and 10 lakh to individual unlisted person, so I have classified 30 lakh. If these are from listed entity, I have reported over here, and these are total I have made. Land 100 lakh as a non-GST supply, I have left it. Motorcycle 25 lakh from a registered person supplied, so I have put it from a registered person, and this is the total I have reported capital expenditure. Now, if there is a multi-state GST registration or multiple state semi-state, ultimately at the head office level we have the net figure, wiping out the effect of inter-branch sale or purchase. So what we have to see? We have to see turnover reconciliation, appropriate reporting of electronic, cash, credit, liability ledger, inter-EIN supply in single entry, cross charge of solvency probably one entity to another entity. Whether expenses to be reported in total expenditure includes GST, I have already told this. Thank you. Thanks a lot. This is all on my part. Thank you, Nishan. Thank you, Ankit.
Nishanji, you can take question and answer session.
Yes, sir. Yes, sir.
I kept in my mind interactive session, but it's a one-way session.
Yes, sir. Manoj sir, thank you. And there is a very wonderful session. And yes, sir. Yes, sir. Yes, sir. Definitely.
So I can
Yes, sir.
stop the sharing, I think.
Come from audience side, sir. So just I would like to ask one by one, sir. As section 43B, as section 43B specifically disallow the interest expense which is converted into a loan, whether such disallowance shall be permanent in nature or temporary nature, sir.
It's a temporary, permanent in nature.
Okay, sir.
Sir, you
Second question, sir. If there is a difference in opinion between tax auditor and the client with respect to the applicability of TDS provision on a particular payment, how to report such difference in the tax audit report?
See, I have dealt this issue that in para 3 of form 3CA and para 5 of form 3CB, we have to give the opinion of the auditor, we have to give the opinion of the SSC, and let it AO decide about it. Form 3CD is a part of the SSC, so whatever is filled, leave it as it is, and you give both the view in form para 3 of form 3CA and para 5 of form 3CB. And we are not to give our opinion, we are to give the facts.
Okay, sir. Sir, clause 44 is introduced in the last financial year, and a lot of questions arises from the tax auditor side. As para 15.5 of the guidance note on tax audit under section 44AB, while reporting on a clause A of paragraph 3 of form 3CB, tax auditor should report only such those observations and inconsistency which are qualificatory nature.
आवाज तो गूंज क्यों रही है? तो मैं निशांत रिपोर्ट जस्ट दोबारा से बोलना प्लीज टेल इट।
सर मैं रिपीट कर रहा हूं सर।
Sir, kindly speak in front of mic so your voice would be properly audible.
Yes, sir. Yes, sir. As per para 15.5 of guidance note on income tax audit under section 44AB, while reporting on a clause. Sir, I am speaking.
Sir, kindly speak in front of mic so that your voice is clear. You are speaking away from mic, so your voice is roaming around.
Okay, sir. Sir, as per para 15.5. Sir, I am speaking in front of mic, sir.
Whatever.
Sir, I am speaking in front of mic, sir.
Sir, you can ask now. Your voice is audible now, clearly.
Yes, sir. As per para 15.5 of guidance note on tax audit under section 44AB, while reporting on clause A of paragraph 3 of form 3CB, the tax auditor should report only such those observations, inconsistencies which are qualificatory nature.
So yes, if there is an observation, there is a qualification, he is supposed to report that. And what we are looking for to report.
Suppose all details are not available in front of
Then
audit.
it should qualify. He should qualify the report.
Okay. Sir, few participants asked, sir, related to 44. Is clause 44 mandatory? So definitely, sir, I think last financial year, this clause has been mandatory.
This clause is mandatory.
Okay, sir.
Yes, mandatory. Yes, mandatory.
Sir. Yes, sir. Another question, sir. Whether tax audit is restricted to all questions of Form 3CD?
Yes.
Sir, I think कुछ और questions हैं. एक participant है, sir. Suppose a dealing in a retail trade, there are more than 1,500 items in which he has traded. How to report the same in clause 35?
Clause 35 is what of that? Just let us see. No, if that more than, see what you are supposed to go 35 deals with. So let me see.
Suppose the SSC is dealing more than 100, 500 and 1,500 items, sir.
Okay. Let me come to clause 35. Just let me see. See, if you have heard me properly, clause 35 requires that we have to take a certificate from the assessee regarding the principal items he is dealing with. He may be dealing 1,500 items, 2,000 items. We have to take a principal item. What is the principal items? Which is more than 10% of the overall item he is dealing with. So we are supposed to report only principal items, not the all items, as per the guidance note.
Okay. Okay. Okay, sir. So first SSC, auditor will through SSC shortlisted the important items which are revenue more than 10% or.
He will take a certificate. He will take a certificate from the management.
Okay. Okay, sir.
Next question.
Yes, sir. I think, sir, question is over, sir, and I think
actually everyone is busy in the tax in filing of return.
Now, I hope, sir, there are a lot of participants are listening your words through webinar mode. I would like to express our sincere gratitude for the insightful session by you, sir, and address for our participants. We firmly believe that knowledge gained from your session will prove invaluable for our participants in their professional endeavor. Once again, thanks generously giving your time and expertise to enlighten our team. Thank you, sir, for your coordination and entire ICAI team, and especially Raj Chawla sir and Chitale sir for giving me opportunity to join webinar on tax audit. Thank you, sir.
Thanks everyone. Thanks to provide me an opportunity.
Thank you very much, sir.
Thank you. Thanks a lot. Thank you.
Thank you.
शांत
Yes, sir.
आप अपना नंबर देंगे 2 मिनट के लिए, your phone number.
Yes, sir. My number.